We're just at 12:05. Go ahead and start, please. Thank you so much. I'm going to put myself on mute. You're good to go.
Thank you. Thank you, Robbie, so much for your technical assistance, and welcome to everybody who's joined us here today. This is the fifth in our 7-series Resilience webinar series, and today we're going to talk a little bit about financial right-sizing. So let me see. There we go. So there's me, at least a younger me. When I'm not doing work with in conjunction with HCC, I'm a certified business coach working exclusively with executive leadership strategies and growth strategies for the firms. My work with HCC is unbelievably, I find it extremely useful, and working with young entrepreneurs. I'm an advisor and trainer in the business plan competitions that's going on right now. And as Robbie mentioned, I'm the entrepreneur in residence at the HCC Northeast campus. And then I've got a long, extensive corporate career where I ran a strategy function for a very large business services company, was a business unit leader, 1,700 employees, 15 managerial direct reports, and then spent a number of years as a business development executive. But that's not why you're on here today. You're here to learn more about your businesses and how we can accelerate out of this pandemic that we're currently in. So my goal today is to stretch your thinking just a little bit. I know my work with entrepreneurs and my work as a coach, I find so many entrepreneurs who are just kind of stunned by all that's transpired over here over the last few weeks. And so my goal and the goals of other folks are to try to stimulate some thinking about the possibilities. What's next? What could be? Let's wipe the slate clean and see what new opportunities are out there. So that's kind of my goal for today. So if you'd be so kind as participants, if you would just go into the chat box and chat what your goal is for today, or your reason for joining us here today, and then in a few minutes I'll have Robbie take a look at the chat box and we'll share some of that. So let's kind of get into the presentation. So our journey so far, as I mentioned, this is the fifth in our series of 7 workshops that we'll be giving. And so kind of the first 4, we talked about the importance of mindset. Having a strong mental attitude and approach to situations like this is absolutely mission critical. We talked about how do we nurture our existing portfolio of clients. Session 3, we talked about sales, restarting the revenue engine. Number 4, which was held last week, we talked about stakeholder engagement, getting the other people that are helpful and responsible for our success, employees, partners, vendors, and others. How do we engage them during this difficult period? And today we're going to talk a little bit about right-sizing and kind of whipping your financials into shape. So as we talked about, this webinar series is going to lead into a business resilience workshop, and that's going to be about 8 or 10 sessions that we're going to kick off probably later in May. And what we're going to do is a lot of these topics that we've been talking about in the webinar series, we're going to do a deeper dive into these things. So as you see, mindset, metrics, strategic planning, sales, constraints, that sort of thing. We're going to really do a deeper dive into that. And I've got some more information at the end of towards the end of the workshop as to how you can get some information. And the good thing about it is most of you that are here on the call, you'll probably be able to participate in that workshop series at no cost. And but I'm not the ultimate decider on that. I'll give you the information where you can call, but I've been assured that most people business owners will qualify, and we'll give you more information on that a little bit later. So again, we're going to talk about financial right-sizing. So let's go ahead and jump in and kind of get started here. So what is the problem? The obvious problem is, we're experiencing one of the biggest financial downturns that most of us, I would say all of us, have ever faced. This situation is not just limited to Houston, Texas, United States. This is a global situation, a global pandemic. But even in the best of times, we know, having our work with entrepreneurs, business owners are often not comfortable with the financial aspects of their business. So why is that? If you look at most entrepreneurs, most business owners, they ended up in their current roles because they were a really good, let's say, technician, or maybe they were a really good salesperson. So they were in a similar industry where they excelled in either maybe a sales role, account executive role, or maybe they were the top manufacturing person or some very, very technical role. Then they said, hey, there's got to be a better way, and they launched their own firm. So in doing that, as smart as they were in either sales or some technical discipline, the niceties, the subtleties of the financial component of their business, in a lot of cases, they're just not where they should be or where they need to be. So it's kind of like this little picture here. They're trying to play the game of chess, which is understanding your financials and using your financials for information to guide your business, but they're doing it with boxing gloves on. So it makes for kind of a difficult and uncomfortable situation. So what we see so many times is that entrepreneurs, business owners are scared of the numbers. They don't know what the numbers mean. And I'm a recovering CPA, so I'm going to take shots at CPAs throughout the session, so you'll know why. I'm somewhat fortunate in that I'm reasonably comfortable working with numbers, and I'm able to ask questions and get and sort through financials and that sort of thing. But that's probably, in my work as a business coach the last 4 years, has been most surprising, is that folks, a lot of business owners just aren't really that comfortable or knowledgeable, or they don't know how to extract business information from the data of their financials. So as a result, in times like this, they find themselves, kind of scared. They're not knowing what to do. So they operate kind of off of gut feel, but if the numbers are put together well, then the numbers don't lie, right? So therein lies our opportunity. So you would be surprised, or maybe you wouldn't be, when you ask a business owner kind of what their how their business is going, and they say things like, well, if there's money in the bank, then I'm doing okay. And obviously that always gets kind of a good laugh, but the reality of it is, cash in the bank only tells part of the story, because in a perfect setting, or not even a perfect setting, but a better setting, the ability to say, I've got this much cash in the bank, I should have this much more, or I should have less, because I should have more because we're slow on collecting our accounts receivables, or we're paying our payables too fast, or we're setting cash aside so that we can make some capital investments in the not too distant future. So, and we'll talk a little bit about this a little bit more later, but just, relying on some metric as cash in the bank just really, really, really leaves yourself open to some surprises. And I think a lot of entrepreneurs, business owners, felt some of that surprise when this COVID hit. I mean, fortunately, the government was there to backstop with the CARES Act and PPP and that sort of thing, but we also know it wasn't a good deal or an optimal deal for everyone. So we'll talk a little bit about how do we kind of resurrect from that. So in addition to being a recovering CPA, I'm also the eternal optimist. Every glass I look at is half or three-quarters full. So I mean, I think there's a huge opportunity here. And it may not be painfully obvious right now, but if we peel back the layers of that onion skin, we'll be able to see it. So I think this is a very exciting time for any of us that are in business, because what we're doing is we've got an opportunity to restart our respective businesses and practices. And as we restart, we have the opportunity to create some new rules. So as I mentioned earlier, I want to challenge your thinking in our time here today, because the same old thinking is going to get the same old results. So I'm going to ask you to open up your minds a little bit and just be open to the possibilities, because I think there's some great possibilities out here as we think about all that can be as we move forward. So there's not a person here on the phone who is not expecting their business to grow post crisis, right? Because many of us have suffered some. Of course, there have been some people who've just done unbelievable business during the pandemic, during this crisis. But probably for the bulk of us, we're going to be looking at ways to grow. And if you've been participating in earlier seminars, the earlier workshops, we talked about what some of those growth paths are going to be. Probably for many of us, the way we grow in the future won't look a whole lot like how we grew in the past. So as we, because it's the old story in business, right? If you want to sell something, find a problem to solve, right? But I'm going to challenge you that as we move forward, we put our companies on a new growth path. We do a few things a little bit differently. And one of the things I'm going to ask you to think about doing a little bit differently is making sense of the data that your business generates. So we're going to talk financial statements. We're going to talk about some other metrics of performance. But think differently about that, because now that we've had an opportunity to take a breather, either by design or forced to, I think this could be a great opportunity, again, to rethink the business and see how we might do things a little bit better. So I'm often asked my opinion on Austin. What do you think the future is going to bring us? When do you think this thing will be over? And I always answer, I don't have a crystal ball. I don't know when it's going to be over. And I love this quote by Abraham Lincoln, but the best way to predict your future is to create it. So the work that I'm doing with either the entrepreneurs at Houston Community College or the entrepreneurs I work with in my practice, we're working on creating a future. So let me just share something with you, and just to tell you how important this is. So right now at HCC, they're right in the midst of their annual business plan competition. So there's probably about 26 companies that are in all stages of development. Probably the most mature firm, there's probably 2 or 3 firms that have been at it 4 or 5 years or longer. But the vast majority have been at it, 2 years or less, and there's a few startups. But as we are taking these aspiring entrepreneurs through the steps of the business plan, clearly 50 to 70% of them have had to pivot and do something slightly different, or maybe even majorly different in regards to their business model, their approach, and maybe their target customers as a result of the pandemic. Now, they're a little fortunate in that they don't have, for the most part, they don't have a lot of money invested in their businesses so far, or they don't have a building and some other fixed costs or employees that they've got to tend to. But for those of you who do have existing businesses, I understand that pivoting can be a huge challenge. But I also need you to understand that pivoting is sort of a part of what we do in business, because as they say, the only thing we can count on in business is change. And this has been a big change indeed. So what's the big idea associated with this, and as we get into kind of the nitty-gritty of our presentation? And we need to get the slide to flip. Okay. So the big idea is knowing what we're about to cover. Entrepreneurs should be asking the question, how did we operate before? Not having a clear line of sight into what our financials look like, what information we can pull from them, those kinds of things. So let me just give you just a little bit of anecdote. I'm not sure exactly who's on the call and where you are in your respective business life cycles, but there is a lot of value in having clean financial statements. A couple examples. One, if you apply for PPP, I can almost guarantee you, if you were able to produce timely, reasonably accurate financial statements and your payroll records and get them quickly to your banker, you probably got your money relatively quickly, right? Because things made sense. You had an accountant, a CPA, somebody with advanced knowledge of financial statements take a peek, and they were able to push it through the system. I've got an even better story. There's another one of my clients. She, accounting services firm. She works with a local celebrity, and who workers' comp, it's a big part of that client's business. But when this celebrity was applying for workers' comp, the insurance carrier said, wow, based on the quality and the clarity of your financial statements, we would feel comfortable in offering you a lower rate on your workers' comp insurance. Now, I've been at this a long time, and I have never heard of a situation like that. So think about it. It's just one of those unintended consequences of having great or healthy financial statements. The other thing to think about, if you are in a position where you may be considering selling your business or maybe even acquiring another business, in merger and acquisition kind of mode, having great financials absolutely mission critical to help move through due diligence that much faster. And then the other thing is that we know that the stimulus is in place right now, and the banks and the SBA specifically is probably looking the other way as it relates to the quality of your financial statements in some regards. But these programs aren't going to last forever. At some point in time, you're going to have to kind of step up to the plate and kind of go back to the more traditional lending institutions, and the ability to be able to present clean financials that make sense. It's going to help you with your the timing of your loan process, and probably could be very, very helpful in getting a preferred rate on those loans that you'll take out, probably in the not too distant future. So we share this with you because all of us are looking for better days, better outcomes, and just taking a little bit of time to invest in our business and again, I joke that I'm a former CPA because I assure you I didn't find accounting all that much fun. But as I work with my clients now, and as I'm a business owner as well, it's not that much fun, but it is very, very, very important. So good. So, Robbie, I think we're going to take a couple seconds here. I think we're going to put it back out to our audience. Maybe if we can go back, maybe did anybody put anything in there in terms of what their goals were, and then any comments on what's been helpful to people on the call so far up to this point. Robbie?
Sure. So the chat is open, Austin. I have not seen any responses directly to me, or if it's to you, I wouldn't see it. So if you want to look on the chat panel, folks, if you want to submit via the chat panel a question for Austin or give some feedback, go ahead and type it in, send it to he or I, and let's see. So far, I'm seeing none, Austin.
Okay, no worries at all.
Heads up, you've also got about 4 people who were called in.
Okay. Well,
so
that just means we're doing a great job of sharing information, I guess. Okay, well, good deal. Yeah, so again, like Robbie said, we just encourage you to use the chat room, if comments, questions, that sort of thing. So again, our theme for today is financial right-sizing. So as within all of these presentations we've been doing, there's really 5 key principles. Again, this is one of those things that we could literally talk about for hours on end. But there's probably 5 key things that we want to make sure that is top of mind for you as you go back to your respective businesses, your respective enterprises. And that first one is this is kind of a no duh, right? But cash is king. The ability, those folks that are sort of having a not as rough time as we go through this crisis are folks that have kind of prepared for the future. I think we know in business that there's ups and there's downs, and so the shrewd operators know that the good times don't last forever. I mean, think about where we were as an economy, less than 2 months ago, right? Unemployment was at an all-time low, right? Gross any measure of productivity and output and just a healthy economy were just off the chart. Stock market at an all-time high. And I listened to several people at the beginning of the year, and they would talk about this people from the chambers and economists and that sort of thing, and they would talk about the health of the economy. And then they would say, and they would literally whisper. They said, well, the good times can't last forever. So they said there might be the beginning of a recession towards the end of the year, maybe into 2021. But they all said there are no strong indicators at that juncture, we're talking about January, February, that could even suggest that it will be into a full-blown recession, at the end of the year or even going into the beginning of the year. So they were just hinting at it. So those of you who again, planned for the rainy day and kept cash, you're in a, I'm not saying you're in a great place, but you're in a much better position than those who who didn't prepare for the rainy day. Because I think I just saw an email earlier today that even though we've got all of these loans and programs that are out there, CARES and EIDL and Main Street loans and so on and so forth, I'm just shocked at some of the delays associated with that, either through processing delays or people not providing the right information, or information being mishandled during one of the handoffs. So it goes on and on and on and on about all the things that are going wrong. So obviously keeping cash in the business, hanging on. I hate to say this, but if you're dealing with a number of non-critical suppliers, they're going to have to get in line. You're going to have to push them back. They are not a priority. Your priority vendors or stakeholders, as we talked about last week, are those folks that are mission critical to you providing goods and services to your clients and to your clients and customers. So obviously, money spent on payroll, well spent. If your people are properly deployed, it's a tough time to be a landlord right now because everybody I've ever talked to, and the recommendations I'm giving is go back to your landlord and try to negotiate some sort of forbearance. In fact, I was on a webinar yesterday, and one of the gentlemen on there has probably been in the real estate business 40 or 50 years, and he was giving some really good tips on how to get the best deal from your landlord if you find yourself in that case. This is a time that you should be thinking about selling maybe excess inventory or other assets that at least for the foreseeable future aren't going to be useful or helpful to the business. So cash is king, and hang on to it at all costs. Spend wisely, right? So that kind of goes without saying, but we're going to talk a little bit in the next slides that follow about get a little bit more granular on what the spending wisely, what does that mean specifically, and some things for you to think about. But Robbie, in the interest of time, I'm going to keep moving through here, and we'll stop it after the next section and poll for questions. Okay? Good. Now, here's a concept. I'm not sure how familiar any of you are, but it's this concept called zero-based budgeting. So oftentimes, for anybody of you that have gone through a budgeting cycle, normally what we see is we say, okay, well, I spent $100 on this line item last year. I'm going to add another 4% this year, and that sort of thing. So zero-based budgeting is the exact opposite of that. So we in a perfect world, we're almost going back to ground zero. We're going to say we don't have a business. What are absolutely the mission-critical expenditure or expense items that we absolutely need to have? Because when we think about it that way, we're again resetting our mind or our mindset that things have really changed, and we've got to figure out how we get by with the bare minimum. Because right now, as we all know, we're in survival mode, right? And so I keep bringing it home. Those with cash are gonna weather this a lot more comfortably than those who are short on cash. And those who have a great plan about how to come out of the crisis are going to be even better off. So first, job one is survival, and then this job two is going to be coming out of it. So as you put together, as you go through your zero-based budgeting approach, I would encourage you to develop multiple revenue scenarios for your business. So what does that mean? So I would say, if it was me, I'd put together, here's kind of a semi-optimistic view of what could happen over the next 90, 180 days. Here's sort of a, not optimistic at all scenario, and then maybe put a really, really negative scenario together. So, for example, whatever I experience in terms of revenue in April and May, if I were to spread that out to the balance of the year, what would that do to my revenue? So what you come up with is 3 dramatically different revenue top line or revenue scenarios. So that's important, because then as you go back to your budgeting for your expenses, you want to be able to create what we call a break-even analysis. So break-even is where our income equals our expenses. So it creates a zero profit situation. So if you think about it, if you create 3 different revenue scenarios, you're going to have 3 different expense scenarios. Because the worst thing, I'm not saying the worst thing, but one of the worst things that you could do in a time like this is say, hey, I think we're going to get back to where we were in February. And so you use that as your revenue number going forward. And what happens is it doesn't happen. But now you've ramped up your expenses to accommodate that level of revenue. And now instead of being at a break-even, you're operating at a deficit. And what do deficits do? They eat cash. And what did we say earlier? Cash is king. Hang on to it at all costs. So my recommendation is build multiple revenue scenarios and multiple expense scenarios, and be very, very diligent about how you calculate them so that you can figure out what your break-even budget is. And if you ever need help, just please give me a call. I'm fortunate. I belong to a coaching organization of about 150 professionals. One of the things that we do, just sort of as a courtesy to one another, we've got a running database of cost savings opportunities that we've maintained for the last 5 or 10 years. And right now there's probably about 150, 200 different ways that my fellow coaches have identified on how we can help our clients save money or look at cost categories slightly differently to help them get to whatever their objective is, whether it's break-even analysis, profitability analysis, that sort of thing. So I encourage you to reach out, and I'll share my contact information later on. And so then as we talk about, again, some difficult choices will have to be made, particularly if you're trying to, make some, what's the word I'm looking for? If you're trying to reconcile between a kind of a slightly optimistic scenario and a desperate or destitute scenario, it could be really, really, really challenging. But that's why this is so important that, in fact, I would not even suggest that this is something that you try to do on your own. This is one of those exercises that it's helpful to maybe bring your teammates in, or maybe even talk to some professional advisors or people that have been through something similar to this before, to get their ideas and perspective on the situation. Okay, so let's keep going here. So, Robbie, let's take a peek at the chat room and let me know if there's any questions or comments in there that we need to respond to.
I've got no questions on my end at this time, Austin.
Robbie, we are doing a really good job.
Well,
we're just getting all the questions answered, aren't we?
Yeah, well, here's I think Vikram is one of the participants. He's unmuted himself. Vikram, do you have a question that you want to share from the audio here?
Sure. So I'm listening to the webinar right now, and on the webinar, I don't see any option for chatting or sending a message to you or to the speaker. So I think you've been asking if anybody has a question. So I don't see that chatting option in the webinar at the moment. So I wanted to let you guys know about it.
Interesting. Okay.
Yeah. So usually it's a round button that you would see on the computer. If it's an app that you're using, it's a button for chat. You click on that.
Mm-hmm.
If you don't see it, that's the only panel that's enabled So let me quickly do a test.
Yeah, because I'm listening to the webinar on my tablet, and I see the icon for microphone, video, a cross sign, and there's an option for button. There's an option tab, but I don't see a chat option in that. So I just
right. So
hey, Robbie, why don't we do this? Why don't we? First of all, Rick, thanks for sharing that. Why don't we just go ahead and power through the balance of the slides, and then we'll just take everybody off mute at the end, and we can just have a discussion if that makes sense.
Yeah.
Sure, so I'm going to unmute myself so you guys can continue.
Okay, perfect.
Thank you, Vikram. Hey, Austin, I did get one chat privately from one of the users. It said, "Do you have any specific type of business in mind?"
In terms of, I'm not following that.
Right. So they just sent it now. About 2 minutes ago. The question is, do you have any specific business in mind? So I'm not sure what the last ending comment was for step 2.
Because the way that I created the slides with, these are things, concepts that apply to all businesses.
And the user just did a follow-up. So they're saying restaurant, retail, contracting. So they're giving us more business types. I'm not sure if this user wants to unmute themselves and ask the question. You can.
Yeah, if you'd be so kind as to unmute yourself and then ask the question, because I'm having a tough time following.
Right. Otherwise, we can wait till the end. Both ways are fine.
Okay. If they come off mute, we can stop. But otherwise, we'll keep going. We've got just a few more slides to cover. Okay, good.
Okay.
So,
okay, thanks.
So the next item is metrics and measures, and so I'm going to challenge you, for those of you owners on the phone, I'm going to ask you to start speaking a different language, right? And that's the language of metrics and measures, right? So for some of you, it might seem like it's a foreign language, but accounting and finance, that's really the language of business. And so what does that look like? So again, like I said, I'm going to pick on CPAs because I'm a recovering one. So a CPA, an accounting or finance professional, times like this is really your best friend. And I think we all know that. For anybody who's either applied for a PPP loan, the payroll protection plan, or looking for some of the SBA disaster loans, your ability to provide financial statements that make sense, that are accurate, it's absolutely mission critical. And let's not forget you having your banker in the mix as well. I think it was unfortunate. The secret got out that if you didn't, for many people, if they didn't have an existing banking relationship with an institution, their applications were put to the bottom of the stack in many cases, and in some cases, certain banks shut out all non-customers. So I'm on a one-man crusade to elevate the stature of the financial professionals during this crisis, because last week we talked about stakeholders and people that are there to help for the success, and having a great financial professional able to create some great financial statements on your behalf is absolutely going to be mission critical. Not just as we power through the crisis, but as you again get your business back on the road to success. And there's another word that I want to become part of your new vocabulary as well, and that's return on investment. And it's very, very simple. It's what do I pay, what money do I send out, and what do I get back? Very simple, very simple. So if you think about it, for those of you who are, maybe have an active or ongoing business and you've got a sales team, I used to be a sales guy for a number of years, so I'll pick on them for a while. In most organizations, the sales team is the most measurable group in an organization because every week or every month, somebody's asking them, what did you sell? What did you sell? What did you sell? So the way we compute a return on investment or ROI on our sales team is what are all the costs we incurred as it relates to supporting our sales team, and then what did the sales team bring in? Not house accounts, not people who called in, but what did those sales guys bring in from their own efforts? And if it's not, you as a company have to have a metric. We'll talk about that a little bit, but should it be, if it costs me $100,000 to keep a salesperson in place, they should be bringing in $200,000, $300,000, $400,000, $500,000, $600,000, $700,000 of revenue and or profit, however you calculate your metrics. Your inability to not be able to articulate what that ROI means in your environment is going to create a challenge for you, because what we don't know about this current pandemic is what the recovery is going to look like. I've heard people say it's going to look like a V. It's going to look like a U. I heard the other day it could look like a W, right? Who knows? We don't know. All we can do is plan and execute, right? But if we should have a recurrence of this and we have another shelter in place, and as you begin to pull back, scale back, I want you to focus on pulling back those investments where there's a low ROI attached to them. And then that creates a segue for, again, as I was talking about a little bit earlier, is the productivity measures. So I'm going to give you a funny. I think, in fact, I was on a call earlier today, and one of my favorite terms is, if we can't measure it, we can't manage it, right? And so that's what KPIs or key performance indicators are. So if you look around this chart, there's all of these different things within our business that have a measurement capability or component. So we talk about success. Success is either revenue dollars or profit dollars. We talk about strategy. What's the direction that we're heading? How do we know that we're making progress towards it? It's through our KPIs. Let's say our strategy was we want to acquire a similar-sized company in the next 12 to 18 months. So if I'm leading that particular business, I'm having a meeting with the people that are responsible for that, and I'm going to say, for us to acquire a business like that, we need to talk to 10 high-quality prospects every month. So that becomes my key performance indicator, or KPI. So when I talk to my team who's responsible for chasing acquisition opportunities, every month I'm going to be asking them, did you hit your 10? 10 or more, right? So the last few weeks I've been giving some seminars to some of our human resources brethren, and I've been asking some specific questions around how comfortable they and their teams are about people working from home. So there was a fair number that said, hey, this has been great. Productivity's up 30 or 40%. And then you have the other faction that says, I don't like it. I don't know what my people are doing. I'm not sure what's keeping them busy. So the ones that either don't like it or are unsure about what's going on with their people, it's because they never took on the task of creating a performance indicator or sort of measure of output or productivity for their team members. So they defaulted to a micromanagement type of leadership style, and now when your team is sitting in front of you, it's really easy to micromanage them. I think you'd all agree. But now that they're 3 blocks away, 3 miles away, 300 miles away, micromanagement doesn't work. Not unless you're going to keep somebody on a Zoom call, 12 hours a day, right? we know that's not going to happen. So as you restart, reorganize, or look to maybe acquire another company during this phase, make sure that you have the measurements in place so you know how you're performing. Again, and this is well beyond the financial statements. But I assure you, all of these things and your attention to them, they show up in the financial statements. It's just sort of a more indirect route. So if you've got great KPIs and people are taking care of business and the KPIs are all headed in the right direction, the financial statements will take care of themselves. Because KPIs are what we call forward-looking indicators, whereas your financial statements tend to be backward-looking. They tell you how you did last month, last year, last quarter. Whereas with KPIs, when done correctly and appropriately, you'll know at the end of the measurement period, whether it's daily, weekly, monthly, how well you did, and you can take immediate action. So that's the power of measurement. Okay, anybody want to come off mute and share a thought, question, or share an insight? Okay, we'll keep moving.
Austin, you've got some folks unmuting, so just give them a second.
Okay, I'm sorry.
All right, Vikram, you're good. Go ahead.
Hi, Vikram. I have a question for Mr. Austin.
Yes, sir.
He did mention about the payroll protection and the economic disaster loan from SBA.
Yes.
If somebody receives those loan due to the pandemic, what are the tax implications for that person? Is it considered as an income for the year 2020, or what are the tax implications for somebody gets that money? Just kind of a general thought.
Okay, Vikram, as I mentioned earlier, I'm a recovering CPA, so
okay.
I'm not current. I'm joking, but I know that if you use 75% of your PPP on labor, on payroll and utilities, you've got a good opportunity to have most of that loan forgiven. But it's funny you mention that, because I reached out to a banker this morning, and who said he's going to put together a program specifically to help clients, or probably not clients, just anybody in general, to put together, make sure that they're doing proper record keeping so they can achieve the maximum amount of forgiveness. And the other thing I would share with you is, I don't know how long you've been in business, if you've had some operating losses back, in years past or going forward, but this is the time that I would recommend that you have a very good working relationship with a tax CPA or tax attorney, because of where we are with tax rates and where we've come from and that sort of thing. If you have some net operating losses, or you have some other things that are going on in your business, this is money absolutely well spent, spending time with a tax professional to understand what your options might be, because you've got some deferral opportunities around payroll taxes, and there's just a number of things that are going. And that's not really the scope of what we're talking about here. I don't have any expertise, and I wouldn't want to lead you astray with any advice. But what I would recommend that is you identify a good tax professional and have those kinds of discussions with them, because in fact that just goes for everybody. Because I think this is one. I joke with all the tax guys in my network that yet again the government has created the Full Employment Act for tax accountants, because as I understand, as people share with me, what some of the implications are around these funds that have been allocated, the tax treatment. And of course, it's changing on a daily basis, but tax treatment is going to be mission critical to make sure that you do the right thing for the right reason and avoid trouble with the IRS going forward. So, sorry, I couldn't, Vikram, but I just, I want you to get the best advice possible.
I have one more question, if you don't mind. Can I ask?
All right, go ahead. Just as long as it's not a tax question.
No. So, like you said, a business person should have a relationship with the tax CPA and a tax attorney.
Yes.
So I have a person who basically files my business taxes and does all my tax paperwork. would that be the person, or the tax CPA is different from the person who just does a tax filing for someone's business? So I'm just trying to get
I would say it depends, because that's one of those tough things. So what I would suggest you do is talk to 2 or 3 different tax accountants, tax attorneys, so on and so forth, and then just lay out your some of them, if not all of them, they'll provide you a complimentary consultation, because I don't know who your tax preparer is. I don't want to say they're the right person or the wrong person, but I would suggest that this is an opportunity to talk to 2 or 3 different people to lay out your unique situation and let them share their give you some professional expertise or advice on what you might want to do, because the tax filing, tax preparation field, it's like any other businesses. You've got some really low end providers, but they're really good at what they do, meaning just getting those basic tax returns done. And then you've got the guys like the guys I used to work with at one of the big accounting firms, charge $1,000 an hour, but they're working with Fortune 1000 companies to get stuff done. So I talked to 2 or 3, and my information is at the end. If you just want to hit me with a text, email, I might have 2 or 3 people in my network that I could connect you with. Okay.
Thank you, Austin. Thank you, Ravi.
Thank you.
I'll unmute myself now.
All right, appreciate that. Okay, good. Okay, so acquisition strategy. So even though we, things are tough, I mean, we're still buying stuff for our businesses, particularly if our business may not be as robust or thriving as it once was, but it still goes on, and for a lot of us, we still have to buy or acquire things in order to be a resource to our ultimate client group. But as we do that, we need to think deeply about the decision. When we need to acquire something, the basic question is, are we going to make it, or can we buy it? So this shows up in a lot of different places, and this is again, the question is, do we outsource or do we insource? I mean, do we do it ourselves? And I'll show you on the next slide. This will make sense to you, because I think this is where a lot of companies get themselves into trouble, right? Because so that first top left slide there, cloud computing versus your on-premise server. So this really, what is your IT strategy as it relates to coming out of the pandemic? So I saw some really, really hard lessons learned for companies coming out of Harvey, right? They said, no, that cloud computing stuff, that's beyond me. I don't need that. I've got this server that I've had in my business for X amount of time, and it's fine, and we get it maintained, blah, 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 blah. Harvey hits 3 or 4 feet of water. They've got the server sitting on the first floor, in the broom closet. It takes on 4 feet of water. They lose most, if not all, their data. Whereas if they've been a little bit more forward thinking about risks and what are the possibilities, they might have gone to some sort of cloud platform. So even though it may have been a little bit more in the short term, in the long term, they would have not had to deal with losing all their data. So I'm not even sure how you put a price on that. So then moving to the right, what we see is kind of what along the lines of Vikram was talking about. And I've been harping on all day, having expert financial assistance. I know it's so often we'll take somebody, maybe a family member or somebody we've known well, and I know they didn't finish college and they got a GED, but hey, they can maintain my QuickBooks. That's not a problem, or whatever accounting system that I'm using. So I caution you, just remind you, you're not asking somebody to plug numbers into a piece of software. You're asking somebody to think deeply about what are the implications of the information that's being gathered and put into the software. And typically somebody who doesn't have a little bit of formal training or training in general, it's going to be tough to do. So again, that's one of those where, you might spend a few more dollars in the short term, but in the long term it's going to pay dramatic dividends. So, I mean, here's just the classic, right? I tell all my clients, if you do your own payroll, you are not you're not the kind of strategic client that I want to have. Because payroll is one of those deals where if you're late, all these penalties show up and come along with it. But if you work with a reputable payroll service, it only costs you a few dollars per payroll. But if they are late in filing the returns, most of them will take on the liability of doing that. So again, what you would pay in a penalty for late filing a payroll, that would have paid probably for several months, if not the entire year, for payroll service. And then we've already talked about the advantages of working with a good professional accountant or CPA. Think the HR, similarly, and what we see in smaller organizations, you might have one person doing all this stuff, right? HR, tech support, and doing the accounting when they get free time. And so when you have that, nothing gets served well, right? So if my business was larger, I probably wouldn't have a dedicated HR department, but I would have a resource on dial that I can call when I need things like an employee handbook or somebody to talk through employee relation issues with, help me with my training and development strategy, those kinds of things. Don't need them on a full-time basis, but just a fractional basis. So again, we're going back to the whole acquisition strategy. I need a good or service in my business so I can be productive, but I don't need to have or own 100% of that resource. And then the same goes with the online marketing, right? That piece is so complicated unless you're desire to be like an Amazon, you're probably better served having somebody outsource. Hey, Robbie, I know we're getting short on time, so I'm going to kind of speed through the balance of these slides, okay? So I want to finish off as close as possible. So I'm going to skip this slide here and just kind of go into our final slides. Sure. And then the final slide is mindset. And so what this image is obviously the opportunity to rewire our brains. Getting us to think a little bit differently about how we go about executing against our respective businesses. So, as you recall, for those of you who've been on the entire series, we talked a lot about mindset in our first session. So the thing I want you to remember is, why do we as business people exist? We exist to profitably serve a customer, right? So if we're not profitably serving the customers, we're probably not in business. And as we serve those customers, there's a couple things we're focused on. Our customer, as business owners, we're focused on either one of two things: helping a customer to eliminate a pain or a problem they're having, or help them with gain, or help them capture an opportunity that they've identified is important to them. What we've talked about here today is creating flexibility in your go-forward organization. Because like I said, this is a great opportunity. So for some of us who've been wedded to a single way of doing business, as our customers' problems change, the solutions to those problems have to be new, and which creates opportunities for us as business owners. So having the maximum amount of flexibility in our business activities or business processes, at least for the next 6 to 12 months, are going to serve us well until we figure out what it is that is going to make sense for our enterprise going forward. And then when we are flexible, it gives us the ability to adopt new approaches in our business, right? Because, think about it. The papers are full every day of some company that made a decision that, let's say, hey, we're going to have a physical location on every corner, right? So that was the decision they made, and then so right now, in the time we're in right now, that's an absolutely it's not a bad decision, but it's a bad business model for where we are right now. But again, creating some additional flexibility into your model helps you capture the new opportunities that present themselves when we go through periods of time like this. So. And I'm going to beat on the financial statements and metrics one more time, but having great information, metrics, financial statements, it creates a transparency in our business. and it gives us the clarity that we can make great decisions or better decisions with the information that we're capturing. This helps us become a more nimble operation, a nimble company, and helps us to, again, outdistance or outflank the competitors or people that are in our competitive space. So in conjunction, all that, when it comes together, it creates the success that we all hope for in our particular enterprises. And I think everybody on here, and this is probably why you joined, is to just, looking for a nugget or two to help you with your respective success initiatives. So that's it for the phone presentation. Just a couple things I want to share with you. So hopefully the takeaway from here is that you've got maybe one or two things you can perform against each one of those principles that you can put into some sort of playbook and start executing against originally. So I can't tell you if we're going to be out of this thing in 3 weeks or 4 weeks, 5 months, or 8 months, but there's definitely some things you can start doing immediately to best position yourself to move forward. I'm going to keep moving, Robbie, because I know we're kind of running short on time. So to recap, the key principles: cash is king, focus on zero-based budgeting with multiple revenue scenarios, and what does your expense profile need to look like so you can get to break even against your various scenarios. Learn a new language, the language of metrics and measures. Rethink your acquisition strategy. Sometimes outsourcing can be the best thing that you can do. It may cost you a little bit more in the short term, but in the long term, it pays unbelievable dividends. And if nothing else, work on creating the right mindset that's going to keep you flexible and open to the possibilities. So feel free to unmute yourselves, and if there are any questions and if you'd like to share some takeaway items. And while you're doing that, I'll just, again, here's the format for the Business Resilience Workshop Series, and then I'll give you the information for the Corporate College at HCC, which is going to be hosting this, and then there's their email address and their contact phone number to give them a call, and they'll, like I said, we're probably going to get started late May, but I know they're taking people's information and signing people up. Just had one yesterday that we signed up, and so the good news continues. And the final slide. Okay, this is what we're going to talk about next week. We're going to, for any of those of you who are fans of Stephen Covey's The 7 Habits of Highly Successful People, he spends a lot of time talking about how do we allot time to these things in this quadrant 2, the not urgent but important. So if you look at all these things that are in here, not horribly exciting, fun stuff, but it's absolutely those mission-critical tasks that are going to make us as business owners successful. So there's my information. If anything I can do could be a resource to you if you want to have a conversation, I'm happy to have that. I know we're going to put the slides up on the website, but if you need them sooner, then when we get them up there, either text me or send me an email, and I'd be happy to share the slides with you. I'm sorry we went over, but I'm available to stay on for a few minutes if there's some questions or comments we'd like to field. But if you've got everything that you need from the conversation, please accept my thanks for our time here together, and hopefully we'll see you next Thursday on installment number 6. Robbie?
All right, Austin, thanks. Everybody is unmuted. If anybody has any questions, they can add. Lalita Raman with SCORE was asking the question earlier about which business, let me mute. If you don't have a question, then I'm going to mute you. If you're hanging around, it's because you have questions for Austin. You are unmuted, so if you like, you can ask the question. Austin, earlier, Lalita had asked a question about the different businesses. She was mentioning that every business has a different challenge. Yeah. She said you're really good in marketing, but other businesses will have other challenges. That's what she was referring to as a comment during that first part. She just wanted people to know that there are multiple challenges, not just one or the other.
Yeah, I agree with Lisa 100% because the scope of what we're talking about here is more to create some awareness. But I would strongly suggest that if this workshop was intended to get you thinking, but strongly encourage you to reach out to advisors, whether through SCORE, SBDC, or MBDA, or even myself, or folks like myself, to have those kind of initial conversations and help you kind of walk through and process, what some of your challenges are and, potential solutions to them. Yeah, because, in this environment, a restaurant business, even in the restaurant business, they all have different challenges, right? Because the single location restaurant has challenges and issues very different from a multiple location restaurant. So, so it's always good to talk with somebody outside of your industry or outside of your business that can help you sort of process what's going on. Thanks, Robbie.
Great. So I'm going to stop the recording, Austin. Those